You only need to trade 2 hours a day with this strategy. A perfect strategy for all the part-time traders who have to handle a job and in their pursuit of their trading journey. This is the golden Asian sweep. Throughout this video, guys will learn how to identify the highs and lows that are required to trade this model, as well as the two ICT concepts that are used in play for this gold strategy, okay? Most important thing that you guys have to understand is that we are only trading in between the time window of 8 p.m. Eastern Standard Time towards 10 p.m. Eastern Standard Time. These are some trades that I took this week using this exact strategy on the live stream that we're doing on YouTube, as well as in our Discord server, which the link will be also in the description. Now, prerequisites for this video will be the turtle soup video, as well as the CRT. This will also give you the requirements to understand this strategy to its fullest. The first rule that we have to start off with every single trading day, as soon as price is about to start the 8 p.m. session, which is our trading window, you want to mark out your 15-minute highs and lows, okay? So we're following bullish trend. This would be your normal recent low, and this would be your normal recent high. Understand that the high needs to actually make a retracement to actually be considered a high, okay? As well as over here, you can see right here. So this is a lower high, lower low, lower high, lower low. We identify this as a lower low now because it's starting to make a retracement back towards our lower high, okay? So this is how we're going to identify our key highs and lows. The next part is you have to wait for a sweep of either the 50-minute high and low. As I said, guys, this is a mechanical system. As you can see right here, 8 p.m. now trading window has started, and we are still looking for that sweep or that 50-minute high, and that's what we get right over here. After this, you want to simply look for a displacement or market structure shift on the 1-minute time frame. So you go down to your low time frame, look for some sort of market structure shift, okay? After the sweep has happened, and also keep in mind, you want to make sure that the sweep happens before 10 p.m. Eastern Standard Time. This is the set rules that we're going to have to maintain our profitability in the long run. As you can see right here, here is the lower time frame 1-minute sweep of the high, market structure shift, and with the entry, you can either enter at the candle closure of the market structure shift, or you could wait for price to tap into some sort of order block or fair value gap, okay? Irregardless, you have to understand that you are targeting a 1 to 2, all right? And you're going break even at a 1 to 1. Price makes that 1-minute displacement and starts to move downside right over here. Still reminding ourselves that we're trading within the 2-hour window of 8 p.m. to 10 p.m. Okay, right there you can see price does end up going to our direction. At 1 to 1 we go break even, and after that 10 p.m. no more entries. Okay, from here on you also have an optional way to still scale up your profits, which is leaving off 20%. Okay, so you parse out 80%, then you leave 20% to run all the way down to the opposing low. So if you took out the high first, you'd expect price to come to the low, okay? If you took out the low first, we expect price to rally to the high, okay? And you can use this as your further on targets, reminding yourself you're only leaving 20% off to this partial area, okay? Now, also, very important thing is that we have two models for this, okay? We have, as I showed you right now, the counter trend model, and we also have the continuation model where you can see price follow this bullish trend. So we see that price makes a short-term low, sweeping that and moving to the upside. If you guys watch the video on the turtle soup, you'd fully understand how and why we are doing this, okay? Now, we don't always have to wait for price to make that sweep of the 50-minute recent high and low. Instead, we can employ the second scenario where we're using the candle range theory. Right over here, as you can see, we'd wait to see how the 8 p.m. candle opens, okay? You'd be watching this candle on either 1 hour or on the 50-minute time frame. I actually recommend that you guys use it on the 50-minute time frame, okay? Now, what you wait for is simply a range high sweep, okay? Or if price is going to be bullish, it's going to be a range low sweep, okay? As you can see right here, there is also a second model to this where we see same thing. We look at the 8 p.m. candle, price either sweeps the high and then displaces downward, or it will sweep the low and then displaces upward, okay? Now, very important thing, this one is actually recommended for more of the problem challenges. As you can see right here, once broken, same as what we're doing with the turtle soup model, we are waiting for that 1-minute market structure shift. As you can see right here, the candle wick would have your market structure shift on the lower time frame. This is the 8 p.m. candle, as you can see right over there. Right over there, price takes out, actually going back here. As you can see right here, this was actually our 8 p.m. candle right over here, okay? This is our 8 p.m. candle. I just moved over the line here so we can actually see the candle fully. But right here, we mark out the wick high and here the wick low. As you can see, price displaces downward, it takes out the low. So we would expect to look for a 1-minute market structure shift to the upside, okay? And as you can see, that's what happens. Price then takes out that low point, okay, of the 8 p.m. candle, and we see our market structure shift of price breaking not only one high but also another high, okay? After this, same thing, you either enter with the new impulse, placing stop loss below, targeting a 1 to 2. So let's hop onto one more live chart example that you guys can actually use and apply onto your trades, okay? Now, this is gold on the 50-minute time frame. First thing that we do when we're starting off our trading day, we're going to mark out our 2-hour trading window from 8 p.m. Eastern Standard Time towards 10 p.m. Eastern Standard Time, okay? Now, the second step of this mechanical system is marking out your 50-minute recent high and our 50-minute recent low. As you can clearly see that we're following this bearish trend right over here, lower high, lower low, lower high, price making a wick below this low point, making this a lower low, as well as with the retracement that it's following through with, okay? Let's also mark out our 8 p.m. candle range low and the candle range high. Now hop down to the 1 minute time frame for our third play. As you can see that on the 1 minute time frame, we are clearly seeing that we have stripped this 8 p.m. candle range low. From here on, we need that 1 minute displacement to get an entry. Price breaking above this high, okay, a candle high would then be a displacement or a market structure shift. Okay, so we do get a market structure shift right here on the 1 minute time frame, and we also get this order block. From here on, you can set your buy limit at this point. Always make sure to give your stop loss some room, as well as targeting your 1 to 2. As you can see right here, we're targeting the candle range high because we just took out the low. We're just doing the exact opposite of what price swept. And there we go, price taps us in. 1 to 1 will go break even. And then we have a full TP. Also, at this point, if you're looking to be scaling up your profits a lot more, you can just take off 80% at this point and then leave the risk. And then you can then just leave the risk towards the 15-minute high point, okay? Parceling out. And there we go, we hit up full TP, as well as we've now created a sweep of our 50-minute recent high point, okay? This is our 50-minute recent high that we just ripped out. But do we have our market structure shift to get in another trade before our 10 p.m. candle window? Let's see, right over here, this is not a proper, this would not be seen as a market structure shift as we have not broken that point. We get a move up here. And we do have a wick below. And no, we do not get our full market structure shift after our 10 p.m. window. But then there you go, you'd be down for the day and you'd let price play on. But how we usually play this would be price break below this low point here. And we also have a order block right here. From there on, you can also find your 1 to 2 risk in reward ratio. Okay, following this trend for a nice 1 to 2. As always, remembering that we're passing out at a 1 to 1, okay? This would be the entry that you take if price still played out within your time frame window. But as always, guys, if you guys need more clarity also on how to choose the right fair value gaps, you can watch this video right over here. And also, if you need more clarity on how we got this trade using the candle range theory, I've also made a video on that. Unfortunately, this is real trading, and I'll see you guys in the live stream as well as in the Discord link in the description.